What's going on, everyone? Today we are going to be talking about KGEN. KGEN is defying the whole market right now. They're up 9% in the last 24 hours, while everything else inside of the market is absolutely dumping, going down, 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 and down. So we're going to talk about KGEN today, guys. And also shout out to the members of the channel. A member actually requested this KGEN video, so shout out to him for that. And guys, remember, I'm not a financial advisor, none is financial advice. Go ahead, become a member of the channel. But let's get straight into it. So like I said before, we're up 9% in the last 24 hours on KGEN, 7% in the last 7 days here. You can see the trading volumes at 9.2 million, and the market cap is at 53 million. So it is kind of low there on the market cap here. As you can see, it's part of Aptos. So that's what we have for this. But we're going to talk about KGEN and the pricing here. That's the main thing I want to talk about today. So let's jump straight into it. So first of all, this is what we're looking at. We're looking at a symmetrical triangle here. They call this a technically it's a bullish symmetrical triangle, kind of, because it looks like it came in from an uptrend. But it had it was a weird way of coming into it. But what you can see over here is if it came in from an uptrend, it's a bullish symmetrical triangle. If it came in from a downtrend, then it's bearish, but you can see it came in from an uptrend technically. So that is that. And then you can see it has a 54% chance of a continuation to the upside when you have a bullish symmetrical triangle. And this is coming directly from TradingView. So it has a 54% chance to the upside when you have a bullish symmetrical triangle, and that is what this is. So there's a 54% chance. Now, where do I think it's going? Well, the whole overall market is dumping, so I don't see how this thing could have an actual breakout here. It does look like it wants to break out, but I don't know if I would trust that, and I'll mention a few reasons. For one, you can see here the %R trend exhaustion shows the long-term trend is down here trending at the bottom. So the blue line is the long-term trend. Long-term trend is showing like oversold area down here, right? The over-exhausted to the downside area. But the short-term trend has broken out. So all it takes is for the short-term trend to pull back to take this price going down. The only reason the price hasn't crashed yet is because the short-term trend has not necessarily came down here to the long-term trend. So I think eventually this price could go down. So you would definitely want to watch out for that. The levels that you have down here is at 14 cents. That's one support. And then you can also consider this area right here about 16 cents. Well, that's really 17 if you really look at it. But yeah, about 17 cents. That's another support here. So I would say keep an eye out for that. And then also we have more support here at 20 cents, multiple areas of support here at 20 cents, as you can see here. And then you can see the support here at 17 and a little bit of support here at 14 cents. So I do think that there is a possibility that KGEN does pull back here just off of the strength of everything else pulling back. And it could literally pull it down with it. So also when everything else starts to recover, projects that are usually pumping tend to start pulling back when other things start to recover. And that's because people start to rotate their money because they're making profits. So they start to rotate their money out of that and putting their profits into things that are already down. And since KGEN is up right now, when things start going up again, people are going to rotate their money into those stuff. So then they can, ride the wave up as KGEN goes down. So that's a possibility that could be happening. And this thing already has a super low market cap. So honestly, I would be careful with it anyway, because it's a low cap. A lot of low cap coins don't do well in bear markets. So whenever the bear market comes, I would say definitely be careful if it's still trending around that low cap area. But yeah, that's pretty much what I got for the analysis here. I do think that it's going to pull back. I think right now it might look good, but I don't really care about how it looks right now. I'm looking at the whole overall market. But remember, this is a bullish symmetrical triangle, so it has a 54% chance to have an uptrend. But if that uptrend doesn't happen, just remember your support areas of 20 cents, 17 cents, and 14 cents. But the first one is going to be here at 23 cents. That's going to be the Fibonacci support. That's going to be one of the most important ones, because if it goes below 23 cents, that confirms that we're going down to 20 cents. If it goes below 20 cents, that confirms we're going down to 17 cents. If it goes below 17 cents, that then confirms 14 cents. And then from there, we have 9 cents at the bottom, but I don't know if it'll get that low. But anyways, this is pretty much all I got for you guys today. Again, hit the like button and subscribe. Remember, I'm not a financial advisor and none of this is financial advice. Shout out to the members of the channel. A member actually requested me to go over this. So a big shout out to you again. Big shout out to you again, guys. Go ahead and become a member of the channel. And as always, I'll be back with another video.